And joining us now on the debate in Calgary, Alberta, Roger Gibbons, President and CEO of the Canada West Foundation. In the nation's here in studio, Avery Schenfeld, Chief Economist with CIBC World Markets, and Erin Weir, Economist with the United Steelworkers Union. It's good to have you two guys back here at the table here. And to our friends in Points Beyond, thanks everybody for joining us. One of the reasons we're going to have this discussion tonight is because of 12 seconds worth of something that Dalton McGuinty had to say not too very long ago. He said it about the province of Alberta, and his counterpart was not pleased. Michael, if you would, roll the tape, please.
If I had my preferences as to whether we have a rapidly growing oil and gas sector in the West or a lower dollar benefiting Ontario, I'd tell you where I'd stand with a lower dollar.
Okay, Roger Gibbons, help us understand why that comment went over like a lead balloon in Western Canada.
Well, I think there's a recognition that the strong dollar does hurt the manufacturing sector in Canada. The question is, so what? Implicit in the Premier's comment was the suggestion that we could restore a low Canadian dollar by somehow suppressing economic growth and economic activity in Western Canada. That doesn't go over very well, and it doesn't make any kind of economic or national sense.
But that is kind of the way that the Premier of Ontario framed this thing earlier in the week or several days ago, and so we do want to follow up on that. Last week, I think it was, now that I think of it. Of the 250,000 jobs, Erin, that this province has shed, a lot of them have been steelworkers. So where do you guys come down on this issue of whether what's happening in Western Canada is good for the whole country or whether a lower dollar would be better for everybody?
Well, I think the Premier did raise a very important point, which is that the development of petroleum resources has really inflated the Canadian dollar, and that has made manufacturing exports less competitive. But I wouldn't frame it so much as a regional issue. I mean, this affects manufacturers in Alberta as well. One of the reasons that all the bitumen being extracted from the tar sands is not being processed in Alberta is that the Canadian dollar is so high, and it's therefore being shipped south of the border. So, I mean, I think there's an important issue here, but I don't think it should always be framed as a conflict between different provinces.
You won't be surprised if media tend to want to play it that way, though. That does
yeah,
sell
and
newspapers.
I won't be surprised if the Premier of Alberta wants to play it that way right before her provincial election. So I get the politics of it, but economically, I think there actually are some solutions that would benefit both regions. For example, if we believe that currency is overvalued, the Bank of Canada could actually step in to bring it down to a more moderate level. Our central bank effectively has an unlimited supply of Canadian dollars that it could sell to damp down the exchange rate. And over the past year, we've seen a lot of other countries around the world do exactly that. The central banks of Switzerland, Brazil, Japan have all taken that sort of action.
I've heard this term before, Dutch disease. Tell us what that means.
Well, it's basically the idea that an appreciation of natural resource exports drives up a country's currency to the point where other exports are no longer competitive in outside markets, and imports actually become much more competitive in the domestic market. It's called Dutch disease because this happened to Holland in the 1960s when a lot of oil and gas was discovered in the North Sea, and I guess I would suggest that it's happening to Canada now.
Well, that's what I want to know. Do you think we're suffering from Dutch disease right now?
I mean, I do think so. I think there's absolutely no doubt, you know, as Avery mentioned, that all of this resource development is driving up the exchange rate. And it's not just the inflow of foreign currency to buy the resources themselves. It's also the inflow of foreign currency to buy equity in the resource industries. So foreign investors buying Canadian dollars to take over Canadian oil companies or to buy shares in those companies, all of this drives up the currency. And yeah, there's no question it's destroyed a lot of manufacturing jobs in this country.
Roger, how about it? Are we suffering from Dutch disease in this country?
I don't think so. I think what we're seeing is a more profound structural change in the nature of the Canadian economy. And we're dealing coast to coast with the problem of volatility. I mean, the fluctuating Canadian dollar is a concern to the oil patch as much as it is, it's a concern to the oil patch as well as the manufacturing sector. But we're also dealing with tremendous flexibility, volatility in terms of resource prices. So natural gas yesterday hit a 10-year low in Canada. The West has been forced to deal with this volatility as part of the everyday experience. And yet, the region as a whole has done relatively well. So I think we have to look at the problems that the manufacturing sector in Ontario is having, recognize that the problems are real, but don't jump to a quick conclusion that somehow we can fix the Canadian dollar and restore the Canadian economy to some sort of last golden age. The world is changing around us. We're going to be buffeted around by that. It can't be helped, and we have to figure out how to handle it nationally. But we can't sort of turn the clock back and say, we'll go back to the golden age of Ontario manufacturing. It's not going to happen.
Erin, just want to clarify with you. This economy hasn't been good for steel workers, but it's been great for oil workers. On balance, for the country, is it a good thing?
Well, I think we could do more to accentuate the positive. I mean, the province of Alberta could clearly collect much higher royalties from its oil extraction. That would be a good thing for the people of Alberta that own that resource, but it would also reduce these super profits in the oil industry and thereby reduce this inflow of foreign investment that's driving up the currency. And that in turn would be very helpful to workers in other sectors, particularly manufacturing in Ontario. So to me, the question isn't so much whether the positives slightly outweigh the negatives right now. I think there's actually public policies that could help both regions.
How do you like that idea, Avery?
Well, I think you have to be careful on the royalty side. Premier Stelmach tried that with the natural gas sector, and the drilling rigs all went elsewhere. And this is expensive oil. The oil sands are not the world's cheapest supply of oil. And if the returns aren't there, the investors won't be either. That's not the only game in town. In particular, in saying they're not paying completely fair on the currency front.
Erin, quick comeback on that?
If I could just respond briefly to the point about Alberta Premier Stelmach having already tried and failed to raise royalties. And the problem is that those new royalties came into effect right at the start of 2009, at the sort of epicenter of the global financial crisis when commodity prices crashed. I mean, that's what hurt the industry, not the royalty change.
So try it again, you're saying?
Yeah, absolutely, and try it in the context of much higher commodity prices.
Let me get Roger on that. What would the impact of trying to get more royalties out of the companies who are trying to get that stuff out of the ground be, in your view?
Well, there may well be capacity to shift more of that revenue from the private sector into the hands of the Alberta government. That doesn't get us out of this particular box, however. It means that Alberta becomes richer and richer as a jurisdiction in Canada. That can inflame regional tensions as well. So it's, you can shuffle the money around in Alberta, and there may be arguments for doing so, but it doesn't solve the problem of a relatively weak manufacturing base and a strong resource sector across Western Canada.
Okay.
That's because if we're going to find the policy tools, the subsidizations and so on necessary to shore up the manufacturing sector, we've got to have wealth creation elsewhere in the economy.
To an Ontario economist, and I'm looking at you now, Erin, does that sound to you like somebody prepared to sacrifice the manufacturing sector?
No, I actually would agree with Roger that what we need is a national energy strategy that's a bit broader than just the oil sands. I mean, I'd like to see a bit more focus on renewable energy, energy efficiency, and there's a lot of sort of green manufacturing jobs in producing the inputs to those types of energy. So I think we have sort of hit on a point of agreement here.
Roger, I didn't want to put words in your mouth there, but my hunch is that there are going to be people in Ontario who will hear what you just said and say, he doesn't care enough about manufacturing. He's selling it manufacturing down the river at the expense of resource-based economy. What's your view?
They might hear that. They might hear that, and they've got it exactly wrong.
Being here, everybody.
Thanks for having us.
Support Ontario's public television. Donate at tvo.org.